I think the big thing is probably just binary risk. It's when we underwrite an investment, we go through maybe 10 to 20 different scenarios. What happens if interest rates do this? What happens if interest rates do that? What happens if we can't lease this particular unit at the current market rate, and really kind of playing with all the different scenarios on different outcomes based on either markets or based on kind of supply and demand dynamics. And so we really, take that approach when we're underwriting deals to make sure that, we're not going to make a mistake, or we're going to, if something goes wrong, then it's not a horrible outcome. So I think we do see a lot of other managers taking a different approach, which is, hey, we're gonna swing for the fences every single time, and we're gonna take this, really high returning approach. And we've seen a number of GPs that go out and underwrite to a 30% IRR and end up at a 5% IRR. Right. And you're really, as far as from the view from the investors and the LPs, that's not a good outcome. Like, I think we'd rather underwrite to a 15% IRR and get a 15% IRR.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level, and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Kristen, and I'm here with Kholt Mulderrig, who is the managing director of DCA Family Office. Excited to get into today. Thanks so much for being here, Kholt.
Hey, thank you, Kristen. Appreciate the time.
So let's talk about how you got into this industry. What's your background and what led you to DCA?
Yeah, so I did economics as an undergrad. Then went actually into kind of the venture space, and did 2 venture-backed startups. And I think it really intrigued me to understand who was on the other side of the curtain. Who are these, the venture capitalists and these private equity players that are actually making the decisions that drive business decisions. And that led me back to my business degree, and then ultimately into investment banking at DCA. And I stay here today.
Amazing. And kind of give us a little breakdown of DCA and what makes you guys different.
Yeah, I think the firm is extremely unique in that we're focused on really founder and family-led businesses. The firm itself is founder-led, formed about 20 years ago, really as a merchant bank with both an M&A advisory practice, a direct private equity arm, and I sit on our kind of family office practice, which was formed about 4 years ago, really with the goal of providing ultra high net worth kind of families, really a platform to invest within kind of private markets and alternative assets.
Amazing. Yeah. And you guys are in a lot of different asset classes. Can you talk about just the variety that you're in?
Yeah, absolutely. So I think we very much take an endowment approach to alternatives. So we're allocated across private equity. So that would include both growth and buyout stage companies, real estate, obviously, and across all the major.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Kind of food groups there, all the way from kind of commercial office buildings to manufactured housing, multifamily, car washes, kind of anything in between. And then our another sleeve is within infrastructure, so you can think of kind of data centers or telecom and anything that's kind of really the picks and shovels, or the nuts and bolts of really the industrial economy within the U.S. And then we also have a meaningful allocation to all yield, right? And that would be, think agriculture, right? So permanent crops, almonds and pistachios, really taking an uncorrelated bet to the rest of the market, and really kind of focused on generating kind of current cash flow for the family.
That's awesome. And what opportunities are you seeing out there in the real estate space? What's kind of getting you excited right now?
In real estate, I think we're excited about, I think, call it 2025, 2026 vintage year deals. The real estate's been beat up the last couple of years. We're starting to see kind of Fed action move interest rates down. I think that will start to bridge the gap between kind of buyers and sellers, and we'll start to see more transaction volume. And so I think we're really liking things within the multifamily space right now. I think the big thing there is we are heavily focused on kind of core and core plus assets. We haven't seen the rent growth. Rents have been flat. And so really buying, at the end of the day, real estate is all about location. And so it's just buying core assets in the best locations possible, making sure that they're kind of current yield positive day one, and really taking a long-term approach, and not trying to look at what's going to happen, next month or next year, but is this going to be a bet 10 years from now?
Right. And what areas are you, looking at right now that you're excited about?
Yeah, I think, from a market perspective, I think we're a bit contrarian. Actually, I think there's been a tremendous amount of capital flooding into the Southeast. I think we also see that as markets that have been really had a tremendous amount of supply over the last couple of years, and we're not seeing the rent growth as new product comes online, and they're providing heavy concessions to get those properties filled up. And so we're actually kind of pulling back and really looking at some of the locations that have been kind of beat up on the coast during COVID. I think think San Francisco or the Greater Bay Area, Southern California. I think it's also probably just a West Coast bias. We are here in Northern California. And so I think, one of the tacks that we always like to take is our property within a Southwest flight of us, right? At the end of the day, real estate, it is an operating business, right? It's about the people, and you need to be able to get to your properties quickly and to make sure that we can address any issues. So being able to get on a plane and be within, to the property within an hour or so is important to us.
Yeah. And are you guys, as far as like property management, are you guys vertically integrated, or have you kind of developed a team around you?
No, so we take an asset management approach, because we have a national footprint. Like, what we really like to think about is who is the best person, who's the smartest person, who knows this market the best, and who has boots on the ground. And so from a property management perspective, we're going to select third-party managers, which their night and their day is property management, and pick the group that has kind of the best reputation and the most credibility within that particular market. Because we're so widely diversified across asset classes and across geographies. You can't be an expert in everything.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And I think that's, it's a good lesson for any investor. So know what you know well, right? And partner where you don't feel like you have that subject matter expertise. And so I think that's the tack that we've taken to where we have partnerships in different regions, kind of based on the asset class and based on the strategy. And then we have an internal asset management team, which are really managing the property managers and really doing that financial analysis on a monthly basis to understand how the property is performing and being able to take a little bit of a disconnected view, right? Because the property manager is in there tactically day to day. And so we like to make sure that they have the leeway to operate the property as they see fit. And we're able to kind of come in and provide oversight and provide guidance on kind of how we want the ship steered.
Absolutely. And what are your best tips for, finding the right partners? I feel like that's a huge part of it that takes a long time to kind of, you know, it seems like you guys are a well-oiled machine. How did you guys get to that point?
So for us, it's a lot of it is just experience and kind of having the networks that grow over time. We also go through a pretty extensive diligence process, right? You think about diligence on your property. We actually do 2 stages of diligence. So we'll actually diligence our operating partner or our property manager, and we'll also diligence the underlying property. Because if the property could be great, but if it's not managed correctly, you're not going to get to the ultimate outcome that you're driving towards. So we'll go through and really understand the team. Like what's the key man risk there? Are there people that are integral to that team that if they were to leave, it starts to fall apart? We look at the tenure of the individuals on the team. Do you have people that are only been there a couple years and they're leaving frequently, or do you have a lot of folks on the team that have been there 5-10 years? And that really just speaks to the culture of that company and whether they retain the talent. And then the next is track record. Right? We look at every single property that they're managing. How are those assets performing? If something went wrong, then we're going to have a conversation with them to understand, hey, for these 3 or 4 assets that aren't performing well, what's the rationale for that? Is that because of some external factor, or is that because of mismanagement? And so we look at this at a very holistic level, kind of their capabilities within a market and their track record and being able to execute within that market. And then once that's done and we can check the box, then we'll actually look at a property in partnership with them.
I think that's good advice because I think a lot of people kind of fall into the trap of whoever's cheapest or, without actually doing the thoughtful research like that. But there are data points that you can utilize to have a better chance of hiring the right person. So in your line of work, you work with a lot of high net worth individuals and families. Talk about kind of that process and how that, I'm sure that influences how meticulous you guys are in your investing strategy.
It absolutely does. When you think about kind of family offices or high net worth individuals, right? You're going to look at their overall kind of portfolio. And they're going to have some allocation towards public equities and bonds. And then they're going to have an allocation towards alternatives and kind of private markets. And so one thing is really trying to understand what the goals of the family are. Like, do they have, a distribution level that is required to maintain their lifestyle? What's their views on risk? What's their views on ESG? What's their views on kind of the environment or other, areas of interest? And so we can at that point, tailor the portfolio around.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Where they want to be involved, right? If for instance, hey, we're really interested in hospitality, then that may be a core focus for their portfolio with diversification kind of built around it. And so we do want to make sure that when we're building out a portfolio on a family's behalf, that it's not just about maximizing return, which obviously is kind of table stakes. We need to make sure that we're maximizing return for a given level of risk, but also that the family feels involved, right? Because unlike something in public equities where you own Apple stock or you own NVIDIA, right? Within the alternative space, we can actually get the family much more involved, right? We're going to go fly out and look at the property. We're going to tour it on a regular basis. We're going to be in the markets that they want to be. It's very nice for a family to go and say, hey, I'm going to go stay in my hotel, right? And be there and be at the bar and have that tangible pride of ownership. And so that's paramount to, I think, the way that we really work with families to make sure that, hey, this isn't just an investment portfolio for them, but this is really, a lifestyle around kind of investments and being a real part of that.
Yeah, that's amazing. It definitely, I think it makes a difference when people have, I mean, everyone has skin in the game when they're investing, but it feels more real and tangible when you're able to, visit these properties and all of that. You mentioned that the Bay Area, San Francisco, is a market that you guys know very well, and that seems to be kind of on an upswing. Can you talk a little bit more about that?
Yeah, absolutely. I think if you look at a lot of the media coverage, right, I think it tends to always lean towards the negative, right? There's no news like bad news, right? And so everyone always is going to report on that. And I think, because of that, it creates this kind of disconnect in the market where kind of public perception of an area kind of depresses values. And so I think we see that as a, more of a value play. Say, hey, this is irreplaceable real estate here. It's not going away. This is still the epicenter for, tech and innovation, especially with the growth of AI. And for us, that's going to be a good bet long term.
Absolutely. Yeah, I grew up in the Bay Area, so I have a lot of friends over there, and they've been seeing kind of the same thing. Well, that's awesome. I think this has been really insightful, just kind of how you guys function such a large business. I mean, you guys have over $600 million in equity, so that's, I mean, very impressive. Can you talk about, I don't know, maybe you see some mistakes that people make when they're trying to structure their portfolio? Do you see stuff that comes up over and over that you guys constantly educate people on?
I think the big thing is probably just binary risk.
Mm.
It's when we underwrite an investment, we go through maybe 10 to 20 different scenarios. What happens if interest rates do this? What happens if interest rates do that? What happens if if we can't lease this particular unit at the current market rate, and really kind of playing with all the different scenarios on different outcomes based on either markets or based on kind of supply and demand dynamics. And so we really, take that approach when we're underwriting deals to make sure that, we're not going to make a mistake, or we're going to, if something goes wrong, then it's not a horrible outcome. So I think we do see a lot of other managers taking a different approach, which is, hey, we're gonna swing for the fences every single time, and we're gonna take this, really high returning approach. And we've seen a number of GPs that go out and underwrite to a 30% IRR and end up at a 5% IRR. right? And you're really, as far as from the view from the investors and the LPs, that's not a good outcome. Like,
Yeah.
I think we'd rather underwrite to a 15% IRR and get a 15% IRR.
Uh-huh.
And so I think, I think that's at a particular asset level. I think that's where a lot of people fail, is that they're really focused on just, hey, this is the outcome I'm trying to achieve, as opposed to what's the probability of actually achieving that outcome relative to everything else. And so when we work with anybody, it's about that having some ballast in the portfolio that you can say, hey, I'm gonna make these large bets that I know the outcome range is going to be pretty narrow. And then, hey, you want to have your gambling money on the side where you want to shoot for the fences over here. That's okay too, but you're prepared to lose that money. And at the end of the day, the portfolio will still be okay. And so, I think we go through a lot of education with people on just not getting fixated on the deal, and making sure that they're viewing that deal as a component within the broader portfolio. We've had conversations with clients where we're presenting an opportunity to them, and they go and they look and they say, "Oh, that's not very sexy. Like, do we really want to do that? Like, look at this over here. This is sexy. I want to do this deal." And it's like, yeah, there's a role for that deal and there's a role for this deal, and so making sure that you have that balance. At the end of the day, you don't want to lose money.
Yeah, I mean, the non-sexy deals are often the best ones, the best bets.
That's right. Money is sexy.
Yeah, exactly. That's a good way to look at it. Awesome. Well, thank you so much. This has been really insightful, the way you guys do business. Let everyone know where to find you and where to find DCA.
Yeah. So, DCAFamilyOffice.com. You can see our website. I'm on LinkedIn, so feel free to connect with me. Happy to have conversations with anybody.
Amazing. Well, thank you for being here. And thank you, everyone, for listening. Hope you learned a lot, got some inspiration for yourself, and we'll see you back next time. Bye.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.